We are right in the middle of the summer movie season, which is like where the studios make most of their money for the whole year.
People make life decisions based on movies and television.
And you're not going to see any celebrities on television or social media promoting any of their movies while this strike is going on, which is going to really hurt the studios.
These issues have been brewing for a solid 6 years, if not more.
Welcome to Innovation and Leadership. I'm Jess Larsen, back with our mini-series, Hollywood Explained. Excited to be joined by my co-founders of this episode and friends, Laura Walker Lee, CEO at AG Capital, Film Fund, as well as Madre Ventures in Venture Capital, and Andy Horwitz, CEO of Big Swell Entertainment, well-known producer in the industry. Guys, excited to have you back. This is a pretty exciting day. Andy, why don't we let you jump into it here, July 14th, 2023.
Yeah, it's a very, very wild day. It is day one, the actors' strike. They have now joined the writers on strike, which means that it is day one of most of Hollywood coming to a complete standstill. Sort of what I think in our last episode, I talked about was probably coming. I think I felt like this moment was coming. There was murmurs it was happening. And so, yeah, today is literally day one. Everything is very fresh and oddly exciting and scary, and lots going on in Hollywood at the moment.
So besides the immediate things that the headlines are already covering, what's something that people not in the industry may not realize the implications of this?
I mean, there are a lot of implications of this. I think that one of the biggest implications of this is movies, primarily movies, not hitting their release dates that are flags that are planted in dates, usually 2 years in advance of when the movie comes out. And they're planted in advance, 2 years in advance, because the release date calendars are so crowded that everyone's fighting for good dates. And so before you even have your script, usually you're planting a flag and a release date 2 years in advance. And then what you all, as a producer and filmmakers, you're sort of backing your way into those release dates. But as of today, all of those movies that we're shooting, the movies that come out next summer, the movies that come out next winter, that's 2024 summer, 2024 winter, every day that those movies aren't shooting is another day that there's a very good chance that those movies come off of those release schedules. Because what people don't realize is that, pushing, a movie shutting down for 2 weeks, 3 weeks, a month is a very big deal. All of those actors that are in that movie have very, very crazy schedules. And so when you shut one movie down for a month and you don't know when it comes back up, the movie that they're going to do or the show that they're going to go do in 3 months from now is not moving yet. They're not moving at all because they haven't started yet. And so you're creeping up into territory of them becoming unavailable for the rest of the shoot. It has a massive effect in the business. So I think that's a big one. I think the one that's equally as big is that we are right in the middle of the summer movie season, which is like where the studios make most of their money for the whole year. And as of today, no actors are allowed to promote any of their movies that come out for the rest of this summer. So that means no talk shows, no podcasts, no tweeting about their movies, no talking about their movies publicly. We have never seen summer movies released without talent support of those movies. So it's going to have an effect on the box office for sure. That is also coming at a time where box office is struggling and movies are bloated and inflated. And so what you've seen happen in preparation for this is Barbie and Oppenheimer, which are the two biggest movies, and Mission Impossible, probably the three biggest movies of the summer, they pushed up their premieres. And so they had their premieres a week early because they knew this was coming. And so they got those premieres out of the way. But that also means that you're not going to see Tom Cruise on talk shows. Talk shows actually aren't even shooting right now because the writers have been on strike. So it's really this kind of perfect storm that's happening that I think those are going to be the two biggest things that you're going to notice. Movies that you're expecting on a certain date next year are not going to be there anymore. They'll be somewhere around that. TV shows that we're hoping to shoot that we're going to, seasons that you maybe have just finished on your streaming platform and you're hoping for a new season next year, probably not happening next year. Or if it does, it's going to be much later. And you're not going to see any celebrities on television or social media promoting any of their movies while this strike is going on, which is going to really hurt the studios. They are going to feel that for sure.
Yeah. Laura, what about you? What are some other insights here?
Well, for context, the last major strike was in 2008, 2007, 2008. It lasted for 100 days. And the impact on the industry was $2.1 billion. We are 74 days into this strike. And I think that if you're looking at the AMPTP, the AMPTP is the organization, the trade association of like Netflix, Warner Brothers, like all the major studios, all the major streamers, and they negotiate with the Writers Guild of America every 3 years, the Screen Actors Guild every 3 years, and the Directors Guild every 3 years, and they overlap those negotiations. So the writers struck in 2008, and that was the implication on the industry. And now SAG has joined the writers in solidarity. And I think that if the AMPTP had just been dealing with the writers, the standoff would probably last a very long time. But now that the actors have joined the writers, it's a screeching halt to everything that's in production, everything that's being promoted. And so I think that's why there's a lot of industry leaders like studio executives, heads of studios, heads of streamers who got on a call on Monday night and asked for a federal negotiators to step in and try to help the negotiations because they understood the very real and immediate implications of SAG joining the WGA.
Well,
Which, by the way, they did that. They did that 12 hours before the expiration of the deal, which was also very annoying to most of us who saw that and go, "Hey, that's a really good idea to bring someone in like that." But you're bringing it in with less than, we're giving them 12 hours to solve an issue that has been brewing for multiple years and has been in negotiation for now 3 weeks and haven't made any progress. The thought that they were going to bring someone in and solve the problem in 12 hours, especially someone outside the business that has no insight into what's going on, that was somewhat laughable, I think, for most of us in the business. We saw that. Nice idea, but 3 weeks too late, unfortunately.
I totally agree, and I think that that was, I'm sure, an optics play of some kind, but I think that this strike in 2023 is really just a holdover from 2017, because in 2020, when COVID happened in March, the renegotiation between the WGA and the AMPTP was supposed to happen in May of that year. And I think the WGA just wanted to make sure that there was money on the table for their members to be able to survive the pandemic, because the pandemic shut the whole industry down. Because if people can't gather, we can't shoot movies and TV shows. And we didn't understand how the virus worked. And so the negotiation in 2020 was very light. And so these issues have been brewing for a solid 6 years, if not more. And that's why 6 months before the strike of May 2023, the WGA started preparing its members for save your money. We're going to strike in May. And because there are some major threshold issues in this negotiation. I mean, the major issues are, I don't have them memorized, I had to write them down. So one of them is mandatory staffing. The second one is duration of employment. The third one is residuals from streaming. And the fourth one are limits on AI. And we can get into those topics, but I almost want to do a historical analysis of how we even got here. Yeah. Andy, I'm sure you have thoughts about that.
I do. I mean, we're sort of we're in an inflection point right now in business. I think everyone this was bound to happen. And I think if you look at the history of Hollywood over 100 years, every 30 or so years, something like this sort of happens. And this business was, if you look at what's happening right now in the business, especially what's happening with summer movies, when you have movies that are costing $250 to $300 million that are coming up in opening weekends of $60 million, and all of these movies are losing money. What you're starting to see is that the heads of these studios and the people that are making decisions at the studios are making decisions in essentially a business that they have been running for 30 years and are forgetting that the business and the audience have changed significantly. And that eventually, these studios are losing tons of money. They're hemorrhaging money, all of them, and including the ones that are streaming. the only ones that obviously are fine are, Amazon and Apple are going to be completely fine because their studios are, a sliver of their balance sheet. They can shut their studios down tomorrow and their stock price is not going to be affected at all. But all of the other ones, they're trying to figure out a way to make money hand over fist, and they're having a really big problem. And so their solution to that problem, unfortunately, throughout the last few years, has been to change the size of writing rooms to save themselves money, paying people less, paying people buyouts as opposed to performance-based rewards in terms of your success. And so there is a certain point where a lot of us in Hollywood, we're like, okay, I guess that's happening, and we'll sort of go along with it. But now, everyone's sort of like pulling their heads, I wouldn't say out of the sand, but they're all sort of looking at each other going, how much longer can we survive like this? And, most of the business are not wealthy people. They're people that are working, day to day and job to job. And you combine all of that with the fact that there are, let's say, a handful of people running these studios that are wildly disconnected from their employees, from the people that are making their movies for them, and for the artists that are making their movies for them. And then you throw in the fact that the AMPTP is about, I think it's composed of about 350 companies in total, but all of these companies hate each other. And so we, as sort of the employees of these people, when we're making movies for them, we're relying on an organization that wants to put each other out of business to come to an agreement on how much they're going to pay us so that we could survive. And it just created this monumental mess. And it was coming. And so you have artists, writers, directors, actors, producers that are like, we're over it. We're just over it. And I think that one of the biggest things that one of the people, the biggest way that people made a living in this business, made real money in this business, was performance-based monetary gain. Meaning that if you made something that was a hit, that generated income for a company in a significant way, then you would be rewarded for that in a significant way. But the world that we live in now, that doesn't exist anymore. It's completely gone for all levels of the business. And so you're starting to see people that are just angry. They're angry that they can't pay their mortgage anymore. They're angry that they can't, feed their families the way they used to. They're angry at looking at the older generation of Hollywood that has been in charge for so long, that are all sitting pretty in their ivory towers and their giant mansions and flying on their jets. And the rest of the newer generation of Hollywood is struggling. And so I think you add all of that up and you throw all that into a pot, and you have what we're having right now, which is an inflection point of most of the people in Hollywood looking around and going, something has to change. This can't sustain itself this way anymore. And the product is suffering. The art is suffering in a significant way because it's been completely corporatized and driven towards shareholder price and stock price. And that's not what this business was built on. This business was built on very smart people running movie studios to entertain audiences and create art. And we've just gotten so far away from that at this point that here we are at a place where all of Hollywood is stopped right now. We're frozen. And I don't think anyone's going back to work until they can see a different version of Hollywood on the other side of this.
So, Andy, I think my follow-up question there is, Laura texted me today that webinar from Variety that she and I were both watching, and they were talking about this idea of, like, in many ways, this is kind of like the messy middle between what has been and what's about to be. And thinking about, the angle I'm always so interested in is, how can somebody outside the industry who, maybe they're a big real estate investor, maybe they just sold their tech company, they got a bunch of money, they've always wanted to be in the movies, but they hear the horror stories of coming to Hollywood and losing all their money, so they're trying to be smart. When you think about being in the messy middle right now, and all these things need to get figured out, and the fact that there's a bunch of people who are going to be trying to figure out, like, how do I pay the rent over these next weeks and months, and might be going to financial sources they haven't been in the past, and telling them stories that may or may not be as accurate about what's actually going on right now. What's advice you would have, and I'm going to ask you this next, Laura, but what's advice you'd have for someone who's thinking about financing independent film, independent television right now, and is being told something like, "Oh yeah, they're going to figure this out really quick, and then everything's going to be fine," or what kind of advice
Yeah.
would you give?
I mean, the advice I would give would be do something different. Do something that not everyone else is doing. And if you look at people that have come into Hollywood with significant capital, I'm talking about like $500 million or more, usually more. Every single time someone with that amount of money takes their money directly to a studio, that's where they go. They plug their money into the studio system that exists right now, and they do a slate deal that requires them to finance a portion of a major studio's slate. And all that does is feed the beast that we currently have right now. It's part of the reason why we got here, because nobody comes to town with that amount of money and goes, I'm going to start something independent and new. And I'm not going to just plug all of my money into the system because that's what everyone does. And that's what looks safe on paper. And that's what everyone tells us we should do, because every movie we finance will have wide distribution because we're plugged into Warner's or Paramount or Sony. If you take that money and you find intelligent, smart, younger generation people to make decisions on what type of movies you're making and what type of shows you're making. There are so many people that I know that are wildly successful people in this business that have absolutely no power. And they are so frustrated because there's a certain few people that are making decisions that are completely disconnected from the world. But if you're an investor that's coming into town with that kind of money, do something different. Don't plug it into the studio infrastructure, which is what everyone does because that looks safe. Disrupt the business. And right now, there is a massive runway for you to land on where all of Hollywood is going to embrace you and go, thank God someone's here to do something different.
Can we add just a little bit of color to that before we ask Laura the same question? Because I was having this conversation with you, I think, a week ago, and you were explaining like the only way that a slate could make sense is if you're guaranteed to be in the big movies. But what almost always happens is they say it's a slate deal, but they basically keep the best movies for themselves, and they basically stuff a lot of sausage into the slate of kind of laying off a lot of the risk on their maybes on you, the new money. Or can how would you say that
Yeah.
better?
Yeah. I mean, there's a number of different versions of those deals, right? There's you can negotiate whatever you want to negotiate. If you're happy with the deal, great. Most of them, you don't have a say where you're putting your money. You're just committing a certain amount of capital to financing a certain part of a studio slate. And so, for example, like there's one company that I know of, one individual I know that just plugged a bunch of money into Paramount. And they've told him that, by the way, that money that you plugged in, we're going to use that for the next 2 Mission Impossible movies. Great. Who knows when those movies are going to get made? Who knows what the movies are going to cost? Who knows if those movies are going to be successful? I mean, obviously, the chances they are pretty high, but you may have plugged in all of your money into 2 movies because they need that money for those 2 films. Or they may decide that there are movies that are just too big of a risk for them to finance completely on their own, and they're going to plug your money into those movies and mitigate their own risk with your money. If you look around town, there are very few companies or individuals that have plugged that amount of money into a studio system that have lasted more than 5 years in Hollywood. Usually, that's about as long as those companies last because usually the studios will suck up all their money. Sometimes those people make money, most of the time they don't, and then they leave because they had a bad experience. But they just continue to repeat the same behavior over and over and over again. And it's part of the reason why we're here, as opposed to someone coming into town with that amount of money that is going to talk to smart people about a better way to use that money, as opposed to plugging it into a system that is broken, that has been broken for, I would say, close to 5 years now. But those studios need that money. They desperately need that money. It's weird to say it, but like these are billion-dollar companies that that are desperate for that $250 or $300 million that people are plugging into their
It's funny. I
systems.
just texted Laura an hour ago in the Wall Street Journal today that Paramount's parent company, General Amusement, disclosed to their creditors about financial risks they're facing. Right. So, Laura, I want to ask the same question, slightly different, because as Andy talks, what I keep hearing is venture in my head. I got to go to this class at Harvard where they took like a whole semester and put it into a week. So we went to class from like 7 a.m. to 7 p.m., right? It's on the venture capital and private equity industry. This guy named Josh Lerner, really famous professor there. He's like, I got a bunch of what I call dirty data. Okay. So this is not from people's websites. This is partners at major firms. This is associates slipping me thumb drives at a conference saying, you didn't get this from me. Okay. And it's actual returns on different vintages of funds. And he says, when I look at the unwashed data, the non-marketing data, like the dirty data, he says the entire industry loses 2%. So when you think about all the money that Sequoia makes investing in Google, investing in Facebook, whatever, right? KKR, Andreessen Horwitz. So you think about all those huge success stories. The rest of you funds, so to be in the class, you either had to be a fund manager, that's how I got in, or you had to be a portfolio company, or you had to be an LP, right? Family office or something, right? So he's like kind of yelling at us. He was like, so all of you funds, quit patting yourselves on the back and being so proud of yourselves that you finally graduated from investment banking to private equity or to venture capital. As a whole, your fees, your 2 and 20, that 2%, you are losing everyone's money plus 2% as an industry. Stop patting yourself on the back just for being in the industry. And it's this idea of, like Warren Buffett says, like, do things that are within your circle of competence. And I can't tell you how many venture people have said, oh, what we'll do is we just spread the risk across a number of them, and then one of them will work and it'll pay for the whole portfolio. And that is just not the case. That is absolutely the case for the KKR and the Sequoias and the Andreessen Horowitz and stuff. And so, the devil's in the details, right? So, Laura, I want you to talk about the same subject of, because you're in both those worlds of, venture. Like, you're not just spreading risk, you're trying to be extremely selective. You're financing movies with some of the biggest A-list talent in the world, and you're not just spreading your money, you're being intentional. I'd love to have you speak to that.
Oh, thank you. I don't know Josh Lerner, but I would love to take his class. A few years ago, I was at a conference and there were a bunch of VCs on a panel. And I had learned recently, this was probably in 2018 when I was starting to cross over from entertainment finance, which I'd been doing for years, into venture capital, and I was still learning. And I said to the panel in a question form, I said, there's data that supports that the top 10 VCs make 90% of the profits for the whole industry. And I I was kind of laughed out of the room because it was a defensive move, I think, from them, because they're trying to market to a room of high net worth individuals that venture capital is a great, industry to go into, but it's actually incredibly risky. And I love that someone like Josh Lerner is validating those type of terms, because people make life decisions based on story. And like I study narrative economics at Yale. I look at macroeconomic trends, I look at microeconomic trends and how people make these decisions. And speaking of that, people make life decisions based on movies and television. When I was working at CIA, I had a colleague whose clients were the FBI and the CIA. And the reason why he was able to sign them was because when people would sign up to potentially become a CIA operative, they would have to fill out a form, and they would have to list the reasons why they're interested. And Homeland was like a top trending reason why people wanted to join the CIA, which is just like kind of mind blowing to me. And our stories are really important, and our art is really important, and it needs to be protected, and the process needs to be protective. And I just see I see decisions being made at the top that has destroyed the connective tissue, to borrow from Andy's language, between the decision makers at the top and the creatives at the bottom. And I want to get to your question, Jess, but I do think that a little bit of a history lesson might be appropriate, which is the studio system has been around for 100+ years, and they started out being privately owned. And they had a very close relationship with the talent, so much so that they would pay them first look deals and overall deals, make sure they're taken care of on a very base level, in addition to the movies they would end up making with them in the future. In 2000, then there started to be a trend in like the 90s and early 2000s where these studios started to sell off first minority stakes and then majority stakes of their studios to parent companies. And there was a reckoning in 2008 with the crash, because Universal was owned by General Electric. Paramount was owned by Viacom. Warner Brothers used to be AOL Time Warner. And you had these companies that did not understand art. They just included these studios as another company in their investment portfolio. So in 2008, when those parent companies started to suffer, they just started slashing costs. And they looked at the studio budgets and they were like, I'm making up numbers and names here just for illustration, but they probably looked at Tom Cruise's $12 million deal and said, why are we paying Tom Cruise $12 million a year to just sit around? Why are we paying Julia Roberts, $20 million every year to, option material and make movies? Because she's making money on top of the money that they're spending every year. And so there were these overall deals that studios had locked talent into for 100 years that started to get broken up between 2008 and 2011. They started to let these 2 or 3 year deals expire over that time. And we had a thing, Andy, well, it was called Facts on Packs. Remember Facts on Packs? But now it's only 1 page long. Before 2008, it was like 6 or 7 pages long. And it was basically like every page had 3 columns, and it had every studio and what the overall deals that they had, the first look deals they had with every piece of talent. And it was 7 pages long. And by 2011, it was maybe 2 pages long, probably 1 page. That's how many people lost those deals. So directors, really powerful writers, and actors flooded the entertainment industry as independent agents, and they could take their projects to anyone at any time for any reason. They no longer had to check in with a home studio to do that. So that was really an amazing time for independent film. A lot of film references from like the early 2010s to mid 2010s, I think, were really solid. But no one anticipated Netflix shifting from shipping DVDs to becoming a streaming service. And I remember at that time when Netflix was switching over to a platform service, I was working at Creative Artists Agency, and I was packaging together movies, and I was doing financial modeling and structuring for high net worth individuals to get them to invest in movies. But I was also responsible for the exit opportunity for those investors. And so, we would take these movies to market and sell them at a major festival to studios who were now, instead of studios making something from scratch with talent, they were now buying these products as finished products, which was a safer bet because they could see what the reviews were like. They could see the finished product rather than investing speculatively. And that was working really well. And then Netflix started making offers on projects. And we could not get people to get into business with Netflix, even though the financials made more sense, because the studios, part of there's something called a windowing model. So the first window was theatrical, and you don't mess with theatrical. This was like back in the early 2000s. And then there were all these other ancillary windows and ways to make money off of one project. And no one wanted to sacrifice the theatrical window, and Netflix was asking them to do that. And so the way that Netflix overcame that challenge was that they made House of Cards. And that was just such a platform-defining TV show that people started kind of turning to Netflix and saying, oh, like, that's really interesting. And then when they got the Brad Pitt War Machine movie, they publicized it like crazy. And I saw it happen. I heard it happen. People said it to me. I'm not making this up. The consensus was, well, if Netflix is good enough for Brad Pitt, I guess it's good enough for me. And people started to get into business with Netflix and sacrifice all this very healthy ecosystem of recoupment windows into a mono platform of Netflix. And the way that Netflix compensated for that was they paid a lot of money upfront for finished product to get it onto the platform. Then they started throwing a lot of money in the mid 2010s up to now in these overall deals. Now they start locking up talent in these $100 million deals. Mind you, $100 million is not going to the showrunner that they publicize the deal with. It's like some of that money goes to the showrunner and the rest of it goes to the producing of the actual shows. But the optics were that Netflix was just taking over by sheer force of spending. And you have the other streamers who are, doing that too. You have Apple, you have Hulu, Disney Plus, and stuff like less so Disney Plus, but the other two, like that was really the ecosystem. So the threshold issue right now in the strike is writers want residuals like they used to get. So instead of just being paid an upfront fee, a one-time fee for a project, they want the one-time fee, and in success, they also want to participate in that success of the film or the TV show. But the streamers will not be transparent about how any film or TV show does on their platform. And it's a big deal for the streamers because the streamers have a business to run, and quarterly earnings have become so important to the studios and the streamers because now instead of being privately owned like they were last century, they're now publicly traded, and shareholder optics are very important. And shareholders like myself, you guys, the general public, in the 70s and 80s, the average amount of time that it would take a shareholder to sell a stock, they would hold on to it for an average of 8 years. Now that average is 6 months. So the public market is influencing leadership at the top, and quarterly earnings are so important. And culturally, I think we have all told ourselves the lie that the only option of growth is hockey stick growth. When in reality, businesses, they fluctuate. You have good quarters, you have bad quarters, but there's a real fickleness and like unforgiveness in the public markets that the head of these companies now have to answer to. And to dovetail off of what Andy is saying, and to get really specific about it, if somebody were to come in and shake things up, don't have your exit strategy be an IPO. Like, own it privately. I have represented investors who they just had the courage of their creative convictions. Megan Ellison is a really great example, actually. Because of the shakeup from 2008, there was a glut of talent that was available, and she did a land grab for amazing movies, won Academy Awards. She was in her 20s. And I think we saw a bunch of investors come in from other countries. And I think because they're like, if this 20-something-year-old woman can make Academy Award winning movies, then so can I. I've had success in these other industries. And, they've come into varying degrees of success. But, a lot of people come to the entertainment industry not because the profits are there, because sometimes they are and sometimes they aren't. It's art. Like, when investors come to me, I always ask them, what's the win for you? If it's financial return, you're lying to yourself. Like, we might make money along the way, but you need to be doing it for other reasons. And I would very quickly figure out if someone was a fit for me or not, based on their answer. And so I think that, venture capital is very risky. The film and TV industry is really risky, but not at moments like this. It's different because they can do a land grab for creatives because there's been a major disruption in the industry, and they can get blue chip talent, probably at prices that are less than market, because they understand they understand what creatives are trying to make. And I'm going to stop there because I don't want to, take up all the air.
But dovetailing off of that a little bit, I think, as you said, there's a moment right now. I think even if, first of all the stuff that you were saying about how long people hold on to, shares of stocks and quarterly earnings and all of those things that you discussed, my thought was when you were saying that, I was like, imagine trying to make great art underneath all of that, right? Like, imagine like you're doing all of that. That's the background, right? That's what's financing everything. That's what we're all plugging into. That's who's hiring us. Now, imagine trying to make great art knowing that all of that is staring over your shoulder, looking at you the whole time. And all those people have to answer to those people. It's almost impossible. It's why we're at a point in the business where there are very few movies that they're being made right now that anyone's talking about 5 years from now. That's what the result of all of that is. But if you look at, as you referenced Megan Allison, when she came into town at the perfect time, it was the perfect time. She got all this amazing talent to come want to work with her because everyone was looking for something new. And there was amazing movies that were born out of that. One of which I made, which was American Hustle, which I think is a movie that people do reference today a number of times. And Zero Dark 30 and her. And she just had so many great hits because all this talent wanted to work with something different. They wanted to she was a disruptor that she came into town and she made some really great creative choices when she first got here. And so now you're at a place where everyone in town is looking for the same thing right now. And what's going to happen is even if the studios close a deal with SAG and WJ in the next 30 days, none of those creatives are going to forget how we got here. They're all going to remember and they're all angry. And even if their guilds end up closing a deal, they're still going to be looking for an alternative to the traditional studio system because the creative community is upset right now. There are people that are part of the AMPTP that have tens of thousands of jobs in their hands right now, and they messed up. Like we all sat here yesterday, all of my friends in the business, we all got on the phone yesterday. We're like, how did they let us get here? How did these people that are making $50 million a year and flying into Sun Valley, where they're all sitting right now with their private jets and their massive, how did they let all of us down? They did. And all of us are not going to forget it, even if they close their deals. And so when this is over, if it's over in 30 days from now, if it's over in 2 weeks now, if it's over in 60 days from now, or 3 months from now, there are still going to be a majority of the creative community and the artists in this business that are going to be looking for an alternative to the traditional system.
Well, it's interesting. I'd have to take a slight tangent and acknowledge that that Andy's ESP is like really going well because last episode we had almost the exact same Volcom shirt on, and today we've got our Earth Tones on. We got our Earth Tones Vans shirts, and which is funny because I gotta feel all cool this week when Andy invited me to come hang out with him at the Soho House in Malibu, and we should have been planning our wardrobe. Is what we should have been doing there. But instead, you're teaching me how the movie business works.
I think you guys are actually texting. I think you guys are actually texting and leaving me off the chain and planning this.
Yeah. Which skateboard brand next? Don't tell anyone. Don't tell anyone. Okay.
Yeah, exactly. Exactly.
But as you talk there, Andy, I think something that really occurs to me is I think about a number of industries where they are much more asset-driven industries. Okay. Look at large real estate investment trusts where I had Walt Rakowicz on the show who grew Prologis back up to $50 billion. Okay. You need good people doing your deals and stuff, but in many ways, a lot of those professionals, it's a somewhat known quantity, and like the warehouse that you rented to Amazon is not interchangeable. The property manager who went over to make sure that the lights are on and the property's taken care of, like those lawn care professionals are often quite interchangeable, right? And Wall Street's very used to a lot of business systems where the humans are quite interchangeable. I mean, you look at the way the whole school system got changed in the 1800s to provide interchangeable factory workers, where unlike the guilds of the Italy in the 1500s and Michelangelo chipping his marble away, right? It was highly individual based, right? The advantages of interchangeable workers, where somebody just wanted their hands, not their brain, built a lot of capitalism, right? And where I think that sometimes that doesn't translate is, nobody gets confused when you start talking about professional athletics, right? Nobody's like, well, you just need who cares if you have Michael Jordan? We just need another ball player in there. Give me a cheaper one. People don't say that on their outside voice, right? Like the point that it's like, Fenway Park is amazing. Fenway Park has a legend, right? And if the Red Sox start having a bad enough season for enough seasons in a row, there's a bunch of seats that are empty, even though Fenway Park looks exactly the same, right? It's highly talent dependent. And You look at this industry, and everybody listening knows names like Brad Pitt, or think about American Hustle and Christian Bale, right? 100% of people listening know those names. A lot of people don't know the names of some of those directors. Lots of people don't know the names of those producers. Lots of people don't know the names of the other 150 people involved in getting this even off the ground, let alone who showed up to shoot the thing, right? And so this just occurs to me, and I want you both to weigh in on it, that there's probably some confusion from some of the finance people on how much closer this is to professional athletics than to just owning a warehouse you rent to Amazon. Do you have anything to say about that? Laura, let's let you go first this time, and then we'll go back to Andy.
I don't know much about sports, so I think I'm going to go back to your venture question, because I can't draw an analogy between sports and the film and TV industry. But I think that, on the Madre Venture side, I don't just work in venture, I work in mid to late stage as well, to be able to hedge. I think that's a smart way to go about it. The reason why I went into venture and private equity is because I was building the financial models for AG Capital, which finances film and TV, and my models were going sideways because I was negotiating against Netflix all the time, and they were just throwing money at a problem. And I told I told my investors, I'm going to run AG Capital into the ground for no fault of my own if I continue this way. We have to diversify into other asset classes, and just wait out the storm. And it's been a few years, and I've been busy doing the Madre Venture stuff. But I think that, to draw an analogy between venture, private equity, and entertainment, if you're an investor who likes to do mid to late stage, post revenue investments that are close to exit, the analogy that's drawn is proven directors. Because proven directors who have made hit movies, they attract really great talent. And it doesn't have to be someone who has 5 or 6 movies. It could be someone who just has one really amazing movie, because the public makes decisions based on who's on the poster. No one leaves a theater saying, "Man, that screenplay was great." They just don't. And they don't leave a theater saying, some people leave the theater saying, "Man, the directing was so the directing was so good." Most people leave a theater or stop streaming a movie, and they look to their partner and they say, "Man, Brad Pitt was so great in that movie. Zendaya was so amazing in that TV show." And so I think that a lot of the success of a project ends up being the performance that is delivered by an actor. But there's a whole invisible group of people, 150 to 250 people large, that contributed to that actor's performance. And a lot of that gets dictated by the producer and the director. And so I think that if you're an investor who is used to investing in businesses and you're looking for some sort of method to cross over, I could have a 3-hour conversation with you about it. But the high level is, who is at the helm of your project? Who's choosing the department heads? Who's casting? Because it's just like ramping up a business and then ramping it back down. The people, an investor puts money into a bank account, and it all gets spent, and the bank account goes to zero eventually, and then you have to create an exit strategy, which is selling it to a streamer or a studio. So there's a lot of analogies. The muscle memory is actually very similar between the two. It's the terminology that confuses people. And also, venture is very open with its relationships. The entertainment industry is not. It is a gatekeeping ecosystem. Value comes from proximity and relationship, and people make sure to protect the very valuable elements of the industry. And so for that reason, you can't just come in fresh. You do have to partner with people who are known entities in the industry to be successful. Why? The entertainment industry has been burned in the past. Andy, I don't know if you remember the whole rash of Chinese-backed
Oh
companies
yeah, I was
that
right in that one. I remember it very well. Yeah.
money in the 2010s. And what people came to learn was that Chinese investors were coming over. They were meeting people in the industry. They were starting a company. They were releasing a press release with someone very reputable. They would then take those press releases back to their own country and their own stock exchange and bolster the value of their own companies on the stock exchange, because they had really, it just looked like in their own market that they were crossing over and being really successful. And they wouldn't even transfer a dollar over in the end. After the press release was sent, people would just end up being like, oh my gosh, like I wasn't actually financed. We announced before we financed. And enough people did that in the industry where I think that it is pretty insular because people don't want to get burned. And so that's kind of the pocket of my thoughts. And Andy, I'd love for you to weigh in as well.
I have a really good, because I want to use your sports team analogy, Jess, because I think that's a good way for people that outside of this to sort of understand what's happening right now. And the way I would compare, so imagine this. Imagine that Hollywood is, the studios are all different teams, right? Everyone's their own sports team. And everyone's trying to get the best athletes, which in our case are actors or directors or writers. But one sports team only wins ever. There's no losses. They never lose. And the reason they never lose is because they don't tell the other teams what their score is. And so they're running around and they're getting the biggest pieces of talent and they're paying them the most amount of money. And all those pieces of talent are going to the winning team, because that team, which in our case is Netflix, there's no transparency in their numbers. So right now, Netflix only wins. And imagine what other business is there where a company exists and all they have is success. There's no failures because they don't tell you what their numbers are. You don't know. All the other studios, all the other teams, their scores are out there for the whole world to see. We see it every weekend when movies come out in the box office. We could see what movies cost and what they make. But one team doesn't share any of their scores. They only just tell people that we are winning and we are only winning. And they're getting all these superstars to come because they're giving them the biggest checks. And that issue is part of the reason why we're here today, because transparency is being held by one studio, and which is then in turn made the other studios start their own streaming services and not give transparency in theirs, and realizing that, wow, we can only win too if we release things to streaming. And so again, that's why we're here. That's why we're in this moment, because it's been everyone chasing each other. But then if you say all those sports teams, imagine now AMPTP, all those sports teams that don't like each other, they're all together right now negotiating against us who are making products for them. So it's a mess. It's a giant mess. I mean, it really is.
Oh, I totally agree, and I feel like I'm busting at the seams to say this, which is they're winning at quantitative metrics. They're not winning on qualitative metrics. And Andy and I have had a lot of conversations about there aren't that many cinematic references that have come out of the last few years. They're from the last century. They're from maybe the early 2000s or, 2010s at best. But, we went from having 80 shows a year to having 500 to 600 TV shows a year, because the streamers just took over by sheer force of spending. I don't have the stats on films, but I'm sure it mirrors the stat on TV. And just because we have more, forget the basic supply and demand model of if you make too much of a product, the value of them goes down because the consumer hasn't gained any more hours in the day to actually watch this stuff. Just because they're making more content doesn't mean that they're winning. I don't think culture is actually winning. Because the relationship between the decision makers and the artists is more about volume than it is about quality. And I think we need to return to our roots.
Yeah, but part of that is because what you said is really smart, that it's that the metrics are based on quantitative, not qualitative. And that's because qualitative doesn't boost the stock price. Quantitative does. And so when you're talking about quality doesn't raise your stock price, quantity does, in terms of how many subscribers you have and releasing those metrics, which is going to define every quarter and what their stock price is going to be. Then all of a sudden you have organizations that are now essentially every studio that doesn't care about quality. They care about quantity because quantity raises the stock price. And again, taking us all back to that's why we're here today. Like that, when you have every studio in town focused on that at the moment, you start making bad movies, you start making movies that no one cares about, but you're making things and people are paying their subscriptions every month, and that's what's important. That's not what this business was created for. Like this business, that's not how we built this business from the beginning. But here we are.
So it makes me think of a couple more analogies. One of them, Andy was explaining to me some of the nuances of the negative pickup model, and using an example of the movie Air this week. And if you think about the actual movie Air, Nike was nobody at the time. Nobody had ever cut an athlete in. And, this historic thing happens. Michael Jordan gets a portion of every shoe sold, and then becomes Michael Jordan. And then Nike becomes Nike too, right? And you think about this idea of like, there's so many people at the time that would have said you're overpaying for talent. Hence the reason there's so much drama in the movie of like, at the end, they thought they lost it. Are they going to give the deal, right? Is because that was just seen as overpaying for talent. And yet, by partnering with Michael Jordan, does anybody think Nike hasn't made so much more money by having Jordan put his heart and soul into their shoe? Like, I mean, we all know endorsement deals where it's like, it's like the person types out, "I love my BlackBerry," sent on iPhone. Okay, right? Like Jordan put his heart and soul behind that endorsement, and that's a genuine partnership. They weren't just sticking a sticker on a guy, right? And look what that did for Nike. Here's the other one. Netflix and Blockbuster. Didn't we all hate being held hostage by our Blockbuster late fees? I mean, we're all movie people. I could have paid for that Blockbuster movie brand new multiple times for what it cost me to return it as late as I returned it. We all have that so many times. Like when you have a business model that 70% of the revenue was from penalties, that's a punitive model. No wonder once we had an option, we all switched, right? Well, you look at this thing for all the reasons you guys just brought up, that when a streamer whose stock price will let them overpay for a property compared to what it maybe is going to make immediately, right? And they can essentially subsidize that with stock price gains. And it's the race, like kind of what a lot of venture people do of like, just get the eyeballs, don't worry about profitability, we'll figure that out later, right? And you add this and this and this, and the fallout is the Michael Jordans who are actually going to make this thing, right? At some point, like you said, Andy, there's enough anger, and now with collective bargaining, there's enough power to say, okay, you've used us enough. We now want a portion of the shoes that we're going to sell for you. That's my that's my rough analogy, but I'm sure
Totally.
there's nuances that make that analogy not make sense.
Yeah, but totally. And that's what people are saying right now. You used us enough. We've given you the value for your companies. Now compensate us. But what's happening is that instead of compensating people, the response is we're actually going to give you less money. We're actually going to make it harder for you to survive. And so I don't know that you would think that the logical response would be, we've built this massive $1 billion business. Our stock price is at an all-time high. Here's extra money, but actually it's not. It's actually here's less money because it's a very strange thing that's going
on. I think the Air analogy is perfection. I think it's so good. And if I were a listener of this podcast, I might be asking myself, why do I care? Like, why do I care? Like in 2007 and 8, the impact on the consumer was very obvious, because if they couldn't figure out the strike, there would be no new TV shows for the fall, which it was usually September to May was the cycle for TV, and films wouldn't come out. There'd just be a complete absence of content. Now that the strike is happening, there's such a glut of content, the consumers can just continue to watch things, for 2 years probably if things didn't get worked out. But I think it's not so much about consumption. It's about resonance, emotional resonance. It's about our soulfully held values. It's about creativity. There's a whole other conversation going on about AI. And like, what is the sovereignty of creativity? And I think that the film and TV industry needs to hang on and fight for these rights, because if you just look at consumption, you could make a very effective argument that young people are paying attention to TikTok and to YouTube, and the dopamine hits for them. Like, they just want to get to the point. And longer form content is not being valued by people who are entering the 18 to 30-year-old tax bracket, which is what people care about because they have the most disposable income. But I would really push people to take a longer view on these timelines. And there have been studies that have been done about short form content, and the dopamine hits, and they end up suppressing serotonin in people. Then they have a hormonal imbalance. Then they're sick. Like, the things that we kind of know already are now being proven by science. And if I know one thing about culture, it's that the pendulum will swing and hit an apex, and then it swings back. And we're going to get to a point in culture where this very short form, quick, like not artistic content, we're going to get sick of it, and we're going to long for the days of really creative, artistic content. And if we don't protect the artists who are doing that now, we could be having a very different conversation in 10 years. Like, the film industry could be just a very anemic version of itself, and television too.
I mean, I just had a conversation with someone yesterday, and we were saying that if this strike, if what's happening now goes on and the studios hold out and we're in this situation for, let's say, another 45 days, I would say a quarter of the people that I talk to every week at the agencies, management companies, studios, writers, directors, crew members, above line people, a quarter of those people won't be in the business anymore. They can't survive anymore. And so I know tons of people that can't pay their mortgages next month. They can't pay their rent, and they have been squeezed out of this business. And so if there's not a solution soon, we're going to lose an incredible amount of amazing artists that could have done amazing things, but couldn't financially survive long enough to get there because of the system that is in place right now. And so that's a really sad thing to think about. And it is true. You're going to see in the next 2 weeks massive layoffs happening in town at the agencies. You're going to see companies gobbling up agencies. You're going to see, I mean, the business as we know it right now is going to be very different in about 45 days if the strike goes on that long. And there's a weird part of me that I don't like to admit it, but like, maybe that's necessary. Like, maybe the business does have to burn to the ground and be rebuilt. And maybe that's the only way we get through this. I don't know, but it is so sad to see what's going on. I know a lot of writers and directors that are in the process of just giving up because, they're super talented, but they cannot afford to wait any longer. They can't afford to be in this business anymore. So that's my, I don't know how I don't know if anyone has, Jess, if you got anything else, or Laura, but,
I have something.
yeah.
I feel like there are longer term solutions that could be put in place now. Andy, you and I have had very closed door conversations with very smart people about how to move forward. But short of that, I feel like these stock option bonuses for people like Zaslav or Sarandos, like, board members of these companies should really be thinking about redistributing those profits to the creatives that help build these huge platforms. Because I appreciate a really effective CEO, but they didn't do that. They didn't build those companies without the creatives underneath them. And there needs to be a redistribution of wealth. I mean, Zaslav making $250 million last year, $250 million is crazy.
And it's not just wealth. I think it's also a redistribution of power. I do think that the business needs some fresh blood. It does. It needs people that are on the front lines, up there in a position of power, because they know what it's like on the front lines, as opposed to people that have never been anywhere near the front lines. They've never been anywhere near, writers and directors as they're working through their processes, or in production meetings, or in prep, or out there at film festivals discovering new talent. These people they don't go there. They don't do those things. But these are the people that are making decisions that affect all these people. And so maybe if you stopped recycling the same people at the top of the studios over and over and over, and put people in there, up the next generation, or people that are, slightly more have their hand on the pulse of what's actually happening in the world and happening in this business, maybe we wouldn't be in this position. I don't know. But by the end of the day, there is a moment happening in town right now that is really ripe for a solution that I think all of us are searching for right now. And I hope it happens. The worst thing I think that could ever happen right now is that we go back to business as usual, and we fall right back into place of where we were a year ago. And there will be many, many angry people that will be very upset if that happens.
Well, excuse my wardrobe change mid show here. My AirPods were dying. I think about this, and I think about that Megan Ellison and Annapurna example so much, right? Of like, there's all these elements. There's so many folks that feel the way that you're expressing here. Like, it does feel like there is a real opportunity for investors who, if they're willing to come at it with this idea of more the pro athlete approach of the, not just talking a game about talent, but like signaling with the terms of their deals, signaling with what they're willing to put in writing in contracts, that there's a number of the most talented folks in the industry who are maybe open to new players because they feel taken advantage of by who they've had to play ball with in the past. Do you see it similarly or differently?
I mean, I totally agree. I think if they looked at the business through a different lens than has been looked at by most all other investors who come into this business for the last 20 years, that they will realize that they have a tremendous amount of success. Because if you look at the people you're talking to, the people you're getting into business with, and if you look at those people and they've been doing those jobs at other studios for the last 25 years, those are probably not the people that you want for this new thing, because they're going to give you more of the same. But if you give the next generation an opportunity to make some decisions in this business, and people that are actually on the front lines of this business, that are in the weeds in the creative process, giving them an opportunity, I think that you're going to see that not only are a majority of the incredible artists in this business wanting to work there with you, but also the product is going to show. That you will see that the films that you make, or the television shows that you make through that lens, will be movies that will have a much more lasting impression on the world than the ones that are being made.
Celebrities and really coveted creatives are in the reputation management business. They're not normally entrepreneurial because they have a good thing going, and they don't take as many risks as, say, Ryan Reynolds and his team at Maximum Effort. I love what they do. But a lot of people in the industry are not that way because they have a good thing going and they want to protect it. And so it's a gatekeeping mentality in the industry. And this is just a moment in time where the gatekeepers are happy to hand over the keys to somebody who's coming in with like a real solution. And that the window of that opportunity will close as these issues get worked out. I want to be really like sobering about that. The industry is fickle, and so if you're somebody that has ideas, I'm just letting you know, like, come on in, the water's warm. I think it's that kind of atmosphere. And the last thing I'll say is, like, I had a conversation with a partner internationally this week, and we're working on some very large, like 9-10 figure venture. Well, they're not venture deals. They're like mid to late stage. And I normally see the business side of him, and very straightforward, very black and white. And Tarantino came up for some reason. I'm sure I made the reference because of my crossover in entertainment finance, and his face lit up. And I had never seen this side of my venture partner in 2 years. And there's just a soulful resonance that film and TV has that touches parts of people that have nothing to do with their usefulness in society, how much money they make, what kind of car they drive. Like, we are a narrative driven species. And like, I want the creatives to win for that reason. For the people who just love cinema, they love storytelling, and they get exposed to new realities and new parts of themselves because someone crafted a world. And no, it's not easy to make movies. No, it's not easy. It's very unreasonable to make TV shows. The logistics involved are insane. But it's worth it. Like, when it works, it's really, really worth it. And, you know, I'll just stop there. I'm going to quit while I'm
Well,
ahead.
Andy, maybe to follow it up a little bit, can you talk about why there's maybe some more magnetism to kind of the artist equity model of like sharing the upside of a negative pickup and maybe some acknowledgement of something like this?
I mean, it's impossible to think that giving people performance-based compensation isn't going to result in better product. It just is. Imagine that. Like, you're telling someone that here's the money you're going to make, and you're not going to make any more. And this movie is terrible or it's great. You're not making any more. Imagine what that product is probably going to look like on the other side of that. But you have another product, and I will say, Ben Affleck and Artist Equity, they've got a great model over there. They're doing some amazing new things. Tough time to launch a new company right now. And I know that we're all sort of waiting to see what they end up doing, but they've got a great model, which essentially is performance-based and responsible-based compensation, meaning that if you are a part of the core creative team of the movie and you come in on time and on budget, and the finished product is a great movie that makes lots of money for everyone involved, that core creative team all gets to experience the upside of that process. And if you are going into a movie and you are leaving your family for 6 months at a time to go make a movie and working 16-hour days and bending over backwards to make it work, you're going to feel a lot better about doing all of that. If you know that if this movie is successful and the people that are paying for this movie are going to make a ton of money, that you as well as an artist get to participate in some way, shape, or form in that upside. The quality of the product will be much better. It's impossible to argue against that. It just is. And I think, you can look at some of the companies in town that don't pay any performance-based bonuses and look at the quality of the material that's coming out of those companies. It is not what the quality of the material was 10 years ago, 6 years ago, 7 years ago. So to me, that is what this new company that we're all dreaming about on this Zoom right now is going to do. It is going to reward success for the people that are part of that success. And the studios and the shareholders don't want to do that because it's not to their benefit to do that. It doesn't boost the stock price if they pay people more because their movie cost $20 million and made $300 million. So, that idea is not hard to understand, but for some reason, it's a way that we've existed for the last 3 or 4 years in this business, thinking that that's not a thing, but it is a thing.
Well, I know
thing.
we've got to wrap this episode up, but I just can't help but keep thinking of like venture and PE examples from Laura's world of like, I'm a huge fan of David Carlisle. He describes himself as like a failed lawyer who decided to get into private equity in his like 40s, right? And since then has raised, I don't know, 300 billion for Carlisle and pioneered the way that the fund structure works now, where you can have a PE fund and a venture fund and a credit fund, and that just wasn't done before. And everybody made fun of him at first. They called him the McDonald's, the Mick Fund, because he had one of every kind. And then pretty soon now everybody follows him, right? But I watched a great speech that he did at Harvard, and people were talking to him about this idea of, well, aren't you worried that the pension funds who can do direct deals now, that they're, who are trying to hire these private equity employees to just come in-house and they pay them a little more, and aren't you worried that they'll just go direct and that your big 2 and 20 fees are going to go away? And he had a very like non-defensive answer. Like he was not put off. He was not worried about it. And he said, here's the problem. Because of the optics, it's going to be extremely hard for a pension fund to pay an employee millions of dollars. It's just not going to happen. And he said, and so when you look at the fact that the way we are structured, we let, those partners who come in with us, those people who pay their dues and really get what we do in their circle of competence, as an employee of the fund, can become multi-millionaires. It has a magnetism that draws the top talent to us. And as a result, you see that reflected in the deals that get done. And he's just like, it doesn't give me a lot of fear for my industry when I know that, yes, pension funds can get out of the fees they pay me, but they can't get my best people. And it seems like there's an analogy. Laura, would you have anything to say about that?
I totally agree, because I think that people, they want to bet on themselves and they want to participate in the upside. And I think it makes them work. I think it makes them work harder. And so I would draw a direct line between what he was talking about and the entertainment industry.
I like that answer, Laura, and I think that there's lessons to be learned from other industries that we can all adapt, right? You guys, this has been so fun. Thank you so much for going so many directions and adding some insight. I can't wait for the next one of these. Andy, what do you want to leave us with today?
Man, it's just so much swirling in my head. Everything's so fresh and so new. I will leave you with I hope that we as an industry figure this out. I think the world needs us to figure this out. I think there are so many people out there, using the example that you used of with Tarantino in terms of how much this business does for the world, that I really hope that a solution shows up and it allows artists to stay doing what they're doing, and we don't continue to repeat the same behavior that we've been repeating over the last 5 or 6 years. That out of this mess that's happening in Hollywood, that something new is born, and so I really hope. I think about it all the time. As I said last time, I lose sleep about it. There are me and tons of other people smart people in this business that are having these conversations behind closed doors right now, that are trying to figure out a solution to the problem that we're experiencing, and making sure that we don't fall right back into where we were pre-strike days.
Love it. Laura, final thoughts?
I think the obstacle is the way. And in a way, it's a book reference, which I love that book. But in a way, I'm glad this is happening, because I think that hard conversations are being had that probably should have been had a few years ago. And I have faith that solutions are going to be found. But yeah, I definitely think the obstacle is the way, and this was a natural progression, and we just got to get through it. So,
okay.
And we will get through it. We will get through it.
Love it. Okay, thanks everyone. Stay tuned. We're going to have more from Hollywood Explained coming soon. Bye now.